If there's one word that I would use to describe everything that's happening in the world right now, uncertainty. So in the next 45 minutes, we're going to talk about the possibility of the dollar crashing, the potential scenario of Chinese currency being the reserve currency of the world, the future of the cryptocurrency market, and of course, the Great Reset. And the man that I'm going to have this discussion with is the man responsible for exposing the Kwak brothers to what the Great Reset even is, Mr. George Gammon. So stick around to the end, watch the full 45 minutes because this is really, really good stuff. So I actually want to start with this, if it's okay with you, George. So recently you put a video out saying that we are in the dollar end game. And it's one of those videos I watched a couple times. And, by the way, for those of you that are watching, as part of the audience, go check out George's channel. He's got a lot of really, really cool stuff, really great stuff. George, your content is very alike and aligned with what we put out. So I think there's a lot of great fusion there. But recently you did a video talking about we are in the end game of the dollar. And I talked to a lot of investors and people alike. And one of the biggest questions, the most common questions that even I get is, hey man, is the dollar crashing? So for you, George, what would you have to say about that? Is that true? And how is that going to happen? How is it realistically going to happen?
Well, you've got to first try to figure out what time frame you're referring to. So is the dollar going to lose reserve currency status? Answer, yes. I'm 100% sure. And that means a lot for me saying that, because I'm always the one saying there are no certainties, there are only probabilities. So will the dollar lose reserve currency status? Yes. The question is when. Will it happen in 3 months? I don't think so. Will it happen in 3 years? Very unlikely. Will it happen in 30 years? Probability is pretty high. And if you look at how currencies lose their reserve status, it's very slowly. If we go back to the British pound, being the world reserve currency, let's just say in the early 1900s, it didn't just all of a sudden lose its reserve status at Bretton Woods in 1944. People started gradually using the dollar more and more and more, starting at the end of World War I. Going into the 20s and the 30s. So this was a market response that had taken place long prior to Bretton Woods, and 20, 30 years in the making. And so I think that when the dollar, or we might have even started the process already. I think there's a lot of signs out there that would suggest that we have, but that doesn't mean that it's done and it's game over in 3 months. It could be another 10, 15, even 20 years. So some of the signposts out there that I was referring to, I can't recall that video, but just in the news over the last couple of days, we've seen that Saudi Arabia is doing a deal with China to start selling some of their oil in yuan. We saw that India is also doing a deal with Russia to settle some of their transaction in rupees. And then we saw Putin come out this morning, actually, and say that for some countries, he called them, quote unquote, unfriendly countries, that he is going to demand payment for natural gas in rubles. And now that's a little bit different than the dollar losing reserve currency status directly. It's a kind of an indirect thing. He's doing that, I believe, to prop up the ruble. And I want to give a huge shout out to our good friend, Luke Groman, who predicted this probably 3 or 4 weeks ago on Grant Williams' podcast, that in order for Putin to prop up the ruble, it wouldn't be that hard. He said he would just have to start selling the natural gas, as an example, in rubles. And that's exactly what we're seeing him do. But what happens is it is kind of a fringe result or an indirect result from the standpoint of the dollar being weaponized by the United States and the West. And if they weren't able to weaponize it, then Putin probably wouldn't have the need to demand payment in rubles to prop up the ruble in the first place. So, a story that I like to use going back to World War II is when we dropped the bomb on Japan. I read a story the other day on how a lot of our allies at the time saw that. And although they were very friendly with the United States, they started to develop their own nuclear program, because the thought was, okay, well, we're friendly, we're cool with the US right now. But does that mean we'll be cool with them in 10 years? Who knows? There are no certainties. There are only probabilities. So as a result of dropping the bomb on Japan, a lot of our allies started to develop their own nuclear programs. This is an unintended consequence. This is a knock-on effect, if you will. And I think that you could have seen the same thing happen when we tried to boot, or we did ban Russia or some of their banks from the SWIFT system, and we froze their FX reserves. That was basically the financial equivalent of dropping the bomb on Japan, where a lot of these other countries, they look at that and they say, whoa, time out here. If the United States is willing to use that weapon against Russia, then they might be willing to use that against us in the future. Therefore, we want to create a system now that gives us more control over our own destiny in the future. And I think that's exactly what you're seeing with these deals that are being done with Saudi Arabia, Russia, India. I think that you'll also see deals being done with China. Oh, well, in fact, this isn't in the mainstream news, but one thing that I've been doing is I've been trying to read a lot of news sources outside of the West. And this is something that Jim Rogers suggested when I spoke to him a couple of weeks ago. And so I'm trying to, obviously I stay current with the news cycle in the West, but understanding that that's pure propaganda. And then you read the news cycle in Russia, understanding that that too is pure propaganda. And then you try to find some other countries with major news sources to see how they're reporting the issues. And when you have 4 or 5 different sources from different countries, you try to get rid of the noise and really you try to distill what the truth actually is. And one of the stories I've been reading, we've all heard about Visa and MasterCard, the payment systems pulling out of Russia, whether they're just virtue signaling or who knows what they're doing. But, China has their own payment system as well that's similar. And I remember reading that that's pretty much what everyone in Russia is doing. If they were using that let's say they had the Visa logo on their debit card or something like that. They're just going down to the bank and they're just getting a new debit card that's being issued with, instead of a Visa MasterCard logo, it's just got that, and I can't recall the name of it, but it's just got that Chinese logo on it, and they're just using their system. Another thing, going back to SWIFT, we talked about that, and this is another way that the media has really been misleading people. Is, we heard that this ban from SWIFT is just going to completely devastate and destroy their whole economy, and now all of a sudden they can't accept dollars for their oil or natural gas or whatnot. That's all complete fake news. If you understand the SWIFT messaging system, it's very simple to get around that. And one of the ways to get around it is to just do deals with Chinese banks that are on a separate system called CIPS. It's CIPS, and it's the exact same thing pretty much as SWIFT, but it's just something that Chinese banks use directly. So even if they weren't doing business with a Chinese bank, they could use the Chinese bank as a correspondent relationship to go ahead and send the payment or receive the payment from a group in, let's say, the EU that was buying their gas or their oil. So my point there, first and foremost, is to say that this is one way the media is misleading you. They're making it seem like it's a much bigger deal than it is, but also the workaround is to go through this Chinese system that they might not have otherwise used. And if they start using the Chinese SWIFT system, when it's time to go back, maybe they'll just say, no, I like the Chinese system, and I know they're not going to use this system as a weapon against me. And it just, again, illustrates how the major players in the global economy right now are probably looking at the response to Russia, and whether they agree with it or not, they're using it as a warning sign.
Yeah. And by the way, I love that you mentioned that oftentimes the United States have used the dollar as a weapon, especially with countries in the Middle East and monopolizing the oil market there with Saudi Arabia. But I want to mention this one thing. I loved how you talked about Russia, China, and the US as the three major forces, and how a lot of countries want the de-dollarization. I think that's the terminology you used in the video, which, by the way, I'm not going to talk about that anymore because I want our audience to go check out that video. It was you did a great job at breaking it down. But the question that I have looming in my head now is, well, if it's a matter of time before the US is no longer the reserve currency of the world, well, what will it be? Will it be a digital currency? Would it be the yuan? Would it be, and what would that look like for us here?
Yeah, so I think the conclusion of that video, and I know I've talked to Luke about this, was that the dollar will probably still be the reserve. Let's just fast forward 10 years. The dollar most likely will still be the world reserve currency, but it might not be the world reserve asset. Those two things are different. So, if you're a central bank, what are you going to hold as your reserves? Is it going to be the dollar or is it going to be gold? Like another thing that you got to realize, and we didn't talk about this too much, but the US freezing all of Russia's central bank's FX or dollar reserves, that dollar that you have, every single one of your listeners or viewers right now, the dollars they think they have, they're a liability of a commercial bank. And that commercial bank could come in and just freeze your account. And all of a sudden you don't have your dollars anymore. In other words, there's an extreme amount of counterparty risk involved in owning dollars. And the Russian central bank is having to find that out the hard way. But if you own gold, if you're a central bank or just someone in society at large, there is no counterparty risk. None. That gold is not someone else's liability. It is strictly your asset. That's it. So, again, going back to Saudi Arabia, India, Brazil, all Iran, they're looking at what's happening in Russia. And would you want to hold dollars moving forward? Or would you, knowing that they can just press a button and all of a sudden you don't have access to your FX reserves? Or would you rather hold something that is outside of their purview, outside of their control? And I think that the answer is pretty obvious moving forward. Now, does this happen overnight? No, but it's this slow transition. And so in that world, let's say 10 years in the future, you could see these central banks holding gold or Bitcoin, whichever they prefer, maybe a combination of both, as their reserve asset. But still, the means of transacting in the global economy could be the dollar. It's just that, let's use China as an example. So we all know that China runs a huge trade surplus with the United States. So they export us stuff and we basically export them green pieces of paper. And what they usually do, take the green pieces of paper, buy treasuries. And that's what they hold on to for a large portion of their reserves. Well, in the future, they could still do that transaction with the dollar, but instead, as soon as China gets the dollars, they could just sell them directly out into the market or take those dollars and buy gold. So then the gold is what they're actually holding on to, but the transaction itself is still done in dollars. And also, too, I think one of the ideas, and this was Luke's idea, I was just basically explaining it, is some of the energy producing countries like Iran, like Saudi Arabia, Russia, they could start requesting gold as payment for their energy, just like Russia is now requesting rubles for payment in natural gas. And so this would give them a hedge against using dollars, because even if the dollar loses value relative to stuff, they're holding the gold, which is going to maintain its purchasing power. So my point there is they could still use dollar denominated debt. They could still use the dollar for these transactional purposes if it's more convenient. But at the end of the day, that's not the reserve asset they're holding, because they need to hold something that, number one, isn't anyone else's liability. Therefore, no one else has control over it. And number two, something that's going to maintain its purchasing power. We look at that in terms of our own lives, but when you look at it at a country level, you have to understand that these countries have pros and cons, right? And I think I outlined this in the video. China is very dollar rich, but they're energy poor. And so they have to import all of this energy. So they have to be very cognizant of how much oil their dollars can buy. you see. And then Russia, well, they're selling their oil currently $4. So they have to be cognizant. Okay, if I'm getting those dollars for my oil, well, how much are those dollars going to buy me? And if they're going to buy me a lot less in the future, meaning the price of oil is going to go up in dollar terms, then I'm not really motivated to sell my oil right now. I'd rather just keep it in the ground, you see. But if they're settling in gold, again, going back to that point, it incentivizes them to pull this out of the ground, the oil out of the ground now, because they've got a reserve asset that's going to maintain its purchasing power. And China is incentivized because now they have, especially if, I think in that video, I talked about them pegging gold to oil or oil to gold at a specific rate. And therefore, what would happen is that would ensure that China is going to buy the exact same amount of oil with their reserves, i.e. gold, in 10, 20 years as they are today. So then the question becomes, well, what happens to the United States if the dollar is still the reserve currency, but these foreign central banks and a lot of these corporations choose to hold another reserve asset such as gold or Bitcoin? And it goes down on the DXY, or maybe relative to goods and services, but that allows the United States potentially to bring a lot more of the manufacturing into the United States. So you got to go through a period of significant pain where the dollar loses tremendous purchasing power, maybe not against other fiat currencies, but it definitely loses purchasing power to gold, it loses purchasing power to oil, and then the goods and services people are buying daily. But after that transition period, again, 10, maybe 15 years, then the dollar is extremely cheap, which gives us an edge as far as our exports. And then we can start, manufacturing stuff. It makes it, there's an incentive there for entrepreneurs to start building and creating stuff here and actually exporting it to the rest of the world, where right now that's completely cost prohibitive with the dollar at, let's say, 100 on the DXY.
Right. Which, by the way, George, I think that's a very good observation. But I think when you just said that, this idea of a temporary pain, right, before we experience, a better economic times or a better economic structure, so to speak, I think if somebody were to hear that, especially an investor, they'd kind of freak out because, like, well, George, what do you mean? Inflation's already at a 40-year high. The purchasing power of the dollar is already at a lower value. Our president is printing and throwing money out of helicopters. In your opinion, what would the investment outlook, how would it change here in the United States if that were to happen? Because a lot of the individuals that I speak with, they're looking to real estate to be able to hedge inflation. And you see a lot of individuals pulling money out of the markets, out of the equities market, and pulling it into alternative investments. So for you, George, what would that look like in terms of the investment market here domestically if all that were to happen? How would that change?
I think you've got to look at commodities. And I would be very defensive right now. I think you got to look at, what I'm doing personally. I can't give any investment advice, but I'm just, looking at the yield curve as an example, the 2s and the 10s. I'm looking at the curve on the Euro-dollar futures market, and it's kind of screaming recession. And looking at the Fed raising rates. Today, I did a story on how mortgage rates, 30-year fixed rates, have gone from, I believe, 2.5% up to 4.6% as of today in the last, call it 3 or 4 months. So it's definitely going to decrease demand. Now, the supply side of the housing market, who knows? But, I was listening to a book from Jim Rogers the other day called Hot Commodities. He wrote this back in 2004, and he wrote it specifically talking about the super cycle, and that he was predicting actually to continue. He predicted that it would start, which it did, around 96, 98. That's when he started his the Jim Rogers Commodity Index. And then in 2004, I think his argument for the book was that the commodity super cycle would continue, which it did, until 2011. But usually if you look at history, commodity super cycles last about 10 or 15 years. And I think that, especially after I listened to Jim's book for the 3rd or 4th time, I think that March 2020, we probably hit the bottom. And that was the start of this commodity super cycle that we're in right now, that I think will probably last until, call it 2030 or 2035. It's not to say that they go up in a straight line. In fact, if you look at charts, nothing ever does. And I think we're wildly overbought right now. If you look at copper, if you look at nickel, if you look at coal, if you look at oil, I wouldn't buy right now personally. But that doesn't mean that I don't think that'll be a hell of a lot higher in 2030 than it is today. And it will be a great inflation hedge. So I'm just kind of keeping it on a watch list. I normally really like real estate, but I'm very, very hesitant there. And I think that if you're an expert in real estate and you really know how to use leverage, like 30-year fixed rate debt, you've got strong positive cash flow coming in, and you really know what you're doing, and you can add value. Like my buddy Kenny McElroy, that's a good example there. I think there's opportunities for sure. But if you're just a newbie and you don't know what you're doing and you don't have an edge, I would be very hesitant right now. I know I did a story this morning on a Bloomberg article that completely blew my mind. They pointed out the fact that the average American made more in 2021 from their home than they did from their job. I mean, let that sink in for a moment. And something that I say on my channel all the time is that the US economy is completely dependent upon not just asset prices, but asset bubbles, right? So think about the aggregate demand in the United States and the economy being 70% consumption. Well, where is that coming from, right? So let's just assume that the housing market was at all-time highs adjusted for inflation, which it is, but that was a result of people making more money because they were producing more. Right. Well, that's sustainable. But if you have prices at all-time highs and people have bid up the market, but yet they're producing less than they were in 2019, well, that's a big problem because all that consumption is not coming from productivity. It's simply coming from financial engineering. Right. And at some point in time, that game of musical chairs has to end. And if the average listener or average Joe and Jane out there doesn't believe me or doesn't really see what I'm referring to, just simply a thought experiment. Just say, okay, what happens if the stock market and the housing market goes down by 50% in the United States and stays there, like it did in Japan in 90, right? What does that look like? Or what does the US economy look like in 2 years or 3 years? And the answer is it looks like the Great Depression. Now, whether that's an inflationary depression or deflationary depression, as far as consumer prices, I don't know. Obviously, it's a huge deflationary depression in asset prices. But, if the United States, if the average American could only consume what they produced and didn't have any excess purchasing power above and beyond what they produced in the form of home equity or their 401k, that's some severe decline in GDP. Yeah. And that means the unemployment rate skyrockets, that there's some serious pain to get to the other side. But that's the cleansing system that we have to go through in order to start building again on a strong foundation. Because, if there's any story that you need, or if there's any data point that you need to prove that the United States economy is fundamentally unsound, I think it should be the one that we just referenced, on how people made more money from their house than they did their job in 2021. It just goes back to that example I always use. I got it from Schiff about the U.S. economy really being like a heroin addict. And in order for that heroin addict to stay alive, they just need more and more and more of the drug. But at some point in time, if you want to, if that person wants to get healthy, they're going to have to get off the drug. And you can't do it in a way that's easy. That doesn't exist. It's going to be painful. It's going to be very, very hard. But that's the only way to get them to a point where they're healthy again, physically and mentally. And we just need to do the exact same thing with our economy. And if we do, now this could happen it could happen by the politicians and the central planners doing the right thing. Obviously, that's a stretch. But it's got to happen at some point in time. Either it happens from a tops down approach, or it happens bottoms up. From the market forces just say, okay, we're done playing this game. And I think the probability is high that it comes from these market forces, just not playing the game of musical chairs anymore. But the good news is the phoenix does rise from the ashes. So as long as people can weather the storm, so to speak, and if that manufacturing does come back to the United States, then looking forward 10, 15, 20 years, that puts us in a much better position, because not only are we exporting, not only are we producing more than we consume, but also if we get into a position like we were in, let's say, March of 2020, we're not reliant on China or another country for just something as simple as a mask or as simple as a pharmaceutical pill.
Yeah, I mean that's, and to add on to what you just said, I think the big divide between production and consumption, I think that's absolutely key. And something I'll add to the statistic that you mentioned with Bloomberg is that I believe as of February of 2022, the average U.S. household debt is now higher than it's ever been, and it's just over $155,000, I think, is what I read.
All debt, sovereign debt, corporate debt, household debt.
Absolutely.
It's all at all-time highs. So then you kind of, it's no surprise the yield curve is flattening.
Yeah.
When you think about the enormity of the debt on every balance sheet, or every category of balance sheet, and then you think about the Fed raising rates into that, and also into the time of where we've got a war. The yield curve is telling us that it's expecting a recession. Now, it hasn't inverted yet, to be very clear. So it's not at that point where there's like a 90 or 95% probability, but it's getting real darn flat. And again, it's no surprise.
Yeah. No, absolutely. And by the way, I do want to mention, for the sake of our audience, because a lot of people who listen to our channel are real estate investors. And, I will say one of the things that, and by the way, I love what Ken's doing. We've had him on our channel, and I'm a big fan of Ken as well. But one of the things that my partnership's doing is we're going after deals, especially with seller financing, 30-year seller financing. And that's kind of what we're doing to offset a lot of what's happening right now. Because I do agree. I think if you are a bit of a newbie and you don't really have somebody who's very experienced in your corner who knows how to read the markets, it's going to be a little rough,
You're playing with fire. That's for sure.
Yeah,
but if you're an expert and you really know what you're doing, I do think there's areas of opportunity. I think especially in Florida, in Texas, because of what we'll see as the mass migration from these blue states into the red states, which I definitely think will continue for sure. Yeah. That's you got some tailwind there. And I think you just got to look at it as there's all of these cross currents at play at any given time. It's never as though, prices are going to go up just because of this, or prices are going to go down just because of this. You have to consider all of these pressures, because there's 10 reasons why I could tell you prices will go down. There's 10 reasons why I could say prices will go up in specific markets. But my point is, most people are only cognizant of one of the 10. You see, and they need to consider both sides of the equation to truly assess the risk reward, which is someone that's a professional like you, or like Kenny, or like Hartman. That's what you guys do. So when you're going into a deal, you're going into it with your eyes open instead of with your head buried in the sand like an ostrich.
Right. That's exactly it. So a couple more questions for you, George. So, in light of everything that we've talked about, obviously with a lot of individuals moving towards alternative investments, the dollar where it is right now, in your opinion, and I'm curious to ask you, what's your opinion on the future of cryptocurrency?
Well, I don't really have too many opinions on a crypto other than Bitcoin. I think that long term, I really like Bitcoin. Short term, I don't. And the reason I don't is because, let me compartmentalize that. Let's just talk about the price first, and then remind me secondly to talk about why you should own it.
Gotcha. Okay.
Because I think those are mutually exclusive. So as far as the price, you see this range between 40 and 60,000. And what I don't like about it short term is that it's just been trading with the NASDAQ. So it's just trading as a risk asset. And I would like to see Bitcoin trade as truly a hedge against inflation. I'd like to see it trade as something that doesn't have counterparty risk, or something that's a non-correlated asset. But what we're seeing right now is it's extremely correlated. to risk assets, and that's these high flying tech stocks. So short term, I don't like that. I would, in fact, much prefer to see Bitcoin go down as someone who wants to own it long term, as long as it's going down while the Nasdaq's going up. You see?
I see.
So now, longer term, sure, I think it could go much, much higher, but I think everyone should own it. Getting to my second point, it might not be the right time to buy now, at least for me. It's not the right time to buy. I'm going to wait till it kind of decouples from the NASDAQ to buy more. And then I always like to buy when there's panic in the market. So like after a big country makes it illegal or something like that, and everyone sells off. For me, that's when I prefer to kind of nibble and add to the position. But as far as, the main reason to own it, I don't think it has anything to do with the price. I think it has everything to do with owning an asset that's outside of the banking system. Going back to what we were talking about with gold and what's happening with the Russian central bank, we take it a step further back and look at the truckers in Canada. And we see that they thought they had all these Canadian dollars in their bank account until they didn't. And most people don't even think that that's a possibility because they think they own those dollars. They think that those dollars are just, these green pieces of paper that are just sitting in the bank vault, and all they have to do is go pick them up. They don't realize that that's not what happens. When you deposit your quote unquote money with the bank, you're giving it to them. You're giving it that you're lending your money to the bank, and all they're giving you is just an IOU for it. That they can say that they're going to that they're going to acknowledge, or they're not going to acknowledge. So again, we see that on a personal level with the truckers. We see that at a sovereign level with Russia. So I think that's right now the main reason why everyone should own at least a little bit of Bitcoin. Not through an exchange or anything, but just hold it in your hand, with your own storage to make sure that you have some sort of purchasing power. So if the politicians or the central planners decide they don't like what you're doing, they don't like the tweet that you just sent out, they don't like the way that you're handling your family affairs, and they come in and decide that you don't deserve your hard-earned money, that you've got a way to push back, and you've got a way to survive and thrive moving forward. I like gold for that, I like silver for that, I like Bitcoin for that. I like actually watches for that as well. Those are one of my favorite things that no one really talks about, but like a Rolex as an example is something that historically maintains its purchasing power. It's always maintained its purchasing power. If you got the papers and the box and everything, and you can have a $40,000 Rolex, and the banking system can't take that away from you. And even if you had to execute like a plan B, as an example, you'd be able to take that $40,000 and just slap it on your wrist and hop on the next plane. And so for me, that's part of my plan B. And that's something that maybe people might want to consider that they might not have considered in the past.
Yeah. And I think along with Rolexes, there are a lot of people are collecting Pokemon cards. There's a card there like Charizard, right, for $1 million.
Anything like that you can be in. If you got some experience, or if you've got some knowledge, if you got a little bit of an edge, just any type of purchasing power that is outside of the banking system, and the more portable, the better. I think is something that people should look into right now.
Absolutely. So last question for you here, George. You touched on this a little bit when you brought up the central planners and, the global elites. And I know you and I talk a lot about that on our channel, which is important, right? People need to be aware. Absolutely. But, one of the thoughts that I was thinking about as I was watching everything happening around the world, there's one word that I think a lot of people can describe what's happening in the world right now. It's chaos. And obviously we talked about how, for you and I, we see that chaos a lot of times is the perfect, kind of the setting for something like the Great Reset to occur. A lot of these global elitists, they love to kind of point the finger at, capitalism. They love to point the finger at free market principles and guys like us, as an opportunity to say, hey, we all have to not eat meat anymore. We all have to live in these urban cities, and you have to do what we tell you to do. So I'm curious to hear from your perspective and through your eyes, George, What's going on with the Great Reset?
Well, it just goes back to never letting a crisis go to waste.
Yeah.
And I have heard several people in the World Economic Forum sphere actually use those words, that you never let a crisis go to waste. And whether that crisis is COVID or whether that crisis is Russia, Ukraine, I think that they're going to try to analyze this with their long-term objectives and say, okay, how can we get closer to where we want to be, let's say in 2030, by leveraging what's happening in the world today. And, the bottom line is they're central planners, they're Marxists. I would argue they're kind of one step worse than that in the standpoint of eugenicists.
Yeah,
because if you
agree.
think about what their, the belief system of someone who understands eugenics or believes in eugenics is that there's a group of people that are superior. They think they're genetically superior to all the rest of the people in society. Therefore, if you could just wipe out or keep those people that are inferior from breeding, then that's going to benefit society at large. Okay, and obviously we think that's a horrific view today, but it was very popular in the United States in the early 1900s. It's one of the reasons why we had the Buck versus Bell decision in 1927 by the Supreme Court that basically legalized eugenics through forced sterilization. And by the way, the precursor to that was 1905 Jacobson versus Massachusetts, which was about vaccine mandates. Kind of an interesting fact there. But the bottom line is, this is the mindset of someone who believes in eugenics. Okay, well, what's the mindset of someone who believes in central planning? It's pretty much the same thing. Yeah. They believe there's a group of elite that they're just smarter than everyone else, and therefore they should have the authority. They should be able to tell you what to do because you're just too stupid to make all of your own decisions. So I think their worldview is that society would be much better off if these global elite could control not only the countries, but the entire global economy. Another thing that I think they're right on a few items in their argument. I just think the solutions are wildly wrong. Horrifically wrong. Yeah. And it's very similar to Marx. Marx got a lot of the problems right. It's just his solutions were completely distorted. His solutions were, just off the plot. So one of the things that they say is that the population is growing exponentially. That's true. And that the energy use grows exponentially with the population, therefore GDP. But if you've got a situation where energy cannot continue to grow exponentially, which it can't, then in their eyes, you've got two levers there. Either you reduce consumption or you reduce the population. See, now I would come in and say, yes, again, just like Marx, you got the problem right, but solution is not genocide. Yeah. Solution is not eat bugs and ride a bicycle everywhere just so you can fly around the world in your jet, your G6, right. Your Gulfstream, right? That's not the solution. The solution is to take a decentralized approach and reduce regulation and allow the marketplace to solve these problems and understand that if population is growing exponentially, so are the amount of scientists,
right,
that can solve those problems, right? But see, the central planner can't accept that solution because that would destroy their worldview that they are superior to everyone else. Therefore, they should be solving the problems because they're the only ones that are kind of close to this godlike figure. To where that they're the enlightened few that if they can't solve the problem, then no one can, right? So then if we've just kind of summarized their worldview and why they want this great reset agenda, then you have to say, okay, well, let's look at COVID. Well, what they can do is they can start locking people in a cage. They can tell you that you have to do this, you have to do this, you have to do this, to start to condition people to obey. And then let's say a potential war comes up with Russia. And I think that if you're one of the global elite, you have an incentive for the United States to enter this war. Because if the United States enters the war, then it's going to be far easier for you to usurp more power and control. As an example, if, let's say, a nuclear submarine showed up on the coast of Miami or New Jersey, right? A Russian submarine. Mm-hmm. What would that do to the American psyche? I mean, people would absolutely freak out, right? And then I think we've already seen the United States and the West moving towards this McCarthyism 2.0 type of hysteria, right? So you can see the central planners coming out in that case and saying, well, oh my goodness, well, now we're at war with Russia. We need to make sure that no one is funding them like they funded the truckers. Therefore, we need a central bank digital currency, because the central planners, we need to monitor every single transaction. It's for national security. And you can see people not only accepting that, but demanding it.
Right.
And this is the direction the global, because once you get the central bank digital currency, then it makes it much easier for them to micromanage demand and supply and then be in control of the global economy. So this is just one small example that when we start with understanding their objectives, and we take it to the next step, which is understanding the incentives that are involved, and then saying, okay, well, how would this outcome that they're incentivized to produce help them achieve their objectives? And if it would, to a great degree, which I think the United States getting involved with Russia would, then the only thing preventing them from taking action to influence the media, to influence the population to support this type of war, which would help them achieve their Great Reset agenda, would just be their morality.
Yeah.
Right. If you agree that they're incentivized to do this, if you agree that these are their objectives, the only thing logically you could say as to why they wouldn't do this is just because they have this ethical line in the sand that they're not willing to cross. And if anyone watches your channel, or if they watch my channel, or if they just listen to what people like Klaus Schwab say, are you going to bet your hard-earned money that he has that ethical line in the sand? Yeah, I don't think so. And so I think that's kind of what a lot of people should be thinking about, especially if the only information that they're getting right now on what's happening in the world is through the mainstream media. You got to make sure that you're using critical thinking, you're listening and watching channels like yours, so you can be educated. And just like with real estate investing, that you can do this with your eyes open and not with your head in the sand, like that ostrich, just trying to pretend that ignorance is bliss. And let's get overly emotional about this. Let's support the United States going into a war. The next thing you know, not only does that kill, who knows, hundreds of millions of people, but then the global elite are 100 steps closer to this Great Reset agenda.
Yeah. I mean, even to your point, George, I mean, how often did we see, especially with economic turmoil that happened, a lot of these mediums, a lot of these media, outlets saying, oh, this is why we need universal basic income. This is why we need, social credit system here in the United States for our security. I mean, I think that's a beautiful point that you brought up. So, George, thank you for being on here. And obviously we all know your channel, George Gammon on YouTube. I would highly recommend. So you, Jason, and Kenny, I think you guys are like the 3 out of the 6 channels that I watch regularly.
Oh, really?
And you guys always bring it. I mean, it's always phenomenal stuff. And, you guys are obviously 15, 20, 30 years ahead. And it's really neat for guys like me to, be able to follow in that footsteps and learn, because I learned a ton by watching you guys. So I want to give you an opportunity also. I know it's a bit of a ways away, but you got an event in June. Why don't you tell us a little bit about that and where people can get more information on that?
Sure. It's just Rebel Capitalist Live, which is, this will be the 3rd one that I've done. Last couple, we've had about 700 attendees, and we've had just incredible speakers. We usually have 12 per weekend. And the last event we had in Houston, we had people like Kenny, like Hartman. We had Richard Warner, Mark Moss, Lynette Zhang, Lynn Alden, Joseph Wang from the Fed, and then we had several more that I'm forgetting. But then the event concluded with Ron Paul. Just to give you, Kiyosaki was there. My buddy Kiyosaki, he's always there. And so those are the types of speakers that we have at these events. The next one is June 24th through the 26th in Miami, and it's going to be just as amazing as the first two. And if anyone would like more information on that, they can go to rebelcapitalistlive.com. We've got some speakers that I'm talking to right now. So all the speaker slots have not been filled, but some that we just booked. One, Doug Casey, just confirmed, and Steve Van Meter just confirmed this week as well. So you can go there and check out the speakers we do have booked, and then the previous speakers.
I love it. We'll go ahead and put your channel and also rebelcapitalistlive.com in the description below for people watching. So George, thank you again for spending some time with us, and love the conversation. Obviously, we'll have to have you back in early June or late May. So thank you again. Really appreciate it.
Yeah, thanks for having me on.